Guys, welcome and good evening. I am here to present to you another episode of Lit Capital's Market Outlook. I'm your host, Institutional J. Before we get into it, I just want to thank everyone that's gotten us over the line, over 1,000 subscribers on YouTube. It is truthfully appreciated. And in order to celebrate and give you a token of our appreciation, we are doing a free PS5 giveaway, okay? If you're not in the loop about that, please check out our Instagram to follow the actual details of what you need to do to enter that. And that is at litcapital_, okay? It will be in the bio as well on this video. If you haven't liked and subscribed, please do so also as well. It's going to boost your chance of actually being in chance with getting in on that PS5 giveaway. You don't want to miss out, okay? Before we get into it, guys, okay, if any of you are looking into the new year of learning the skill set of trading, please check out litcapital.co.uk. Where you can start your trading journey with us, okay? We are price action based traders. We can teach you the skill set of how to mark up the charts on a technical basis, okay? So head over to our website now if you have not. All right, so before we get into it, we're going to be checking out the economic calendar for the week ahead to see what fundamental data we have and see what we can kind of feed off in terms of certain currencies releasing certain data and how it's going to affect the markets, okay? So as the markets open, which is not long from now, we've got just over an hour and a little while before the markets open. We're going to start with some PMI for the Aussie. We've got manufacturing data coming out, okay? So as soon as the markets open, for those that are trading Aussie pairs, definitely have a look out to see what that can yield. We obviously don't trade Sunday evenings. We kind of let it pan out going into the start of the week, and then we kind of come back to it, okay? So Monday, as you can see, there is a lot of high impact data as well, with PMIs coming out of the euro, as well as PMI for GBP, the pound, and we also have PMI data for the dollar, okay? So Monday, a lot of manufacturing data for us to digest, and then we can kind of see the pairs that we're looking at, what that can kind of happen with. And then as we go into Tuesday, we've got some RBA CPI data, okay, so more data coming out of the Aussie, okay, Q4 data. So this is very important as well, guys. As we're going into the new quarter, we need to see how they've done with the CPI last quarter going into the new year, of course, okay? So then also we have, that's pretty much it actually for Tuesday. Wednesday, we have the goods trades balance for the dollar, okay, interested in that. We also have the Bank of Canada interest rate decision on Wednesday afternoon, okay? Very, very important data coming out. Monetary policy report as well to follow with that. And then later into the Wednesday evening for us, we have the federal interest rate decision, okay? So big news coming out of the dollar, okay? Are we going to see a rate hike? There's been a lot of talks about 2022. We're supposed to see 4 rate hikes coming out of the Fed. Very, very important, okay, leading into that. So definitely, if you are going to be trading this week, look out for that data, okay? Thursday, we got the euro unemployment rate for Spain. Not really interested in just Spain. So it says high impact, but it doesn't necessarily mean so, okay? We also have initial jobless claims from the US Thursday afternoon, so definitely going to be looking out for that for sure. And we also have the GDP growth rate from the fourth quarter of last year for the US as well. So definitely interested in that as well. And then to top the week off, fundamentally, we've got some GDP from the European countries. We've got Spain, France, Italy, Germany. Definitely going to be looking out for that. And then we've got Michigan consumer sentiment to kind of finish off the week. So the middle of the week, Wednesday, Thursday, that's looking like the busiest time fundamentally, and that's probably when we're going to get the injection of volume into the markets, okay? So definitely check those out, those data releases out, and line them up with your pairs that you're looking to trade, okay? So we're going to go over to the charts now, and I'm actually going to start, guys, with gold, okay? So with gold, we've seen a crazy move to the upside, okay? I did say in our Discord community last week that we was kind of looking to see gold push up, because we was, as much as we was getting touches here, if we go to the 8 hour, we was getting a lot of touches here out of area that we was looking at, but the selling volume was not really there, okay? So the fact that it wasn't there, we kind of thought it would edge higher to maybe potentially grab some liquidity. And then as we go into the daily time frame, we can kind of see that there is reasons for it to go up. Okay, so what we're kind of looking for is to see the 1850, 1855 around that area to see what can kind of happen, as that is kind of where we got the volume to the downside injected to. Okay, so we're going to be looking as price, if price, I don't want to say as price, if price gets to this area, we're going to be looking to see if we can gather some shorts, or rejection of some sort around that area. Okay, there are a few confirmations here that we have. I will be uploading a chart in the Discord regarding gold with the analysis of why I think it has potential to keep pushing up to around that area. Okay, so we're not far off of it at all. On Thursday, we kind of neared the 1850 mark, but we kind of fell short. But it's just a retracement as we're going to the 4-hour area. We could potentially bounce off of this level. It's looking like it's done a bit of a retest. We could actually bounce up off of that level and continue higher now. If we get a deeper retracement, great, back into the zone. In terms of where we have this range, if we get a deeper retracement into the range, I think it will be a great buying opportunity to get to 1850 for us. Okay, but if we don't, and it's looking like it's retesting this area here to then go higher, that's the possibility too. Okay, but overall, you know, we should see price get to that 1850, 1855 mark this week, especially with the Fed interest rate decision as well. Okay, so definitely look out for that, guys. So the other two pairs I want to show you is US oil again, something that I've discussed. We have now seen a new higher high reached. We had this, we had this swing here now, where we could potentially be seeing a higher low formed on this pair. Okay, we've got the we had the higher low here, we had a new higher high formed, we have not got higher low. So if we could get a retracement back down, I think we can definitely get a leg back up. Okay, so right now we haven't really got enough data to kind of go off in terms of what is looking like a short formulating. Got a little bit of gap in the market. I'd like to see how this market opens to see if we could potentially get a short. Okay, but right now I don't have enough confirmation to kind of give the short. It is still bullish in my opinion, but overall, you know, once we do get a retracement, we should be looking from the daily perspective that we do get a retracement, because we've had very, very shallow ones, and once we do, we can then continue to get another leg up. Okay, so if you see prices start to fall, oil is a bit of a slow burner. I don't know if it's going to happen within a week. We can definitely see it play out a bit longer, but as and when we get these areas fulfilled in terms of valid retracements, we can definitely get opportunities to the upside. Okay, I don't think the upside is finished on oil. I know we're at very, very high prices when you actually think about it. You know, we've reached over $87, which is, you know, quite crazy to be honest with you. But yeah, we just need a bit of a retracement now, in my opinion, as you know, we've kind of broken those highs on the daily. If we can get the retracement back lower, as and when we get down there, we're going to be monitoring when price looks like it's ready to actually swing. Okay, with oil, it is one of those pairs that if you really are patient with it, you can get entries that give you swing opportunities to really hold. Okay, so that is what we kind of want to see with this pair. Excuse me, going into you know, the first quarter at least, and then we'll see how it pans out. Okay, so the last pair I got for you guys is US 30. Okay, we are at a crucial level for US 30 on the daily. Okay, if this daily level breaks the weekly, there is going to be a lot of downside potential to continue on the weekly. Okay, so where we have this swing on the daily, okay, this is the higher low, we have higher high here. We are at a crucial level. Okay, I'm very aware of the fact that we have liquidity to the downside here, where we have a key level as well, where we actually took we took some buyers last year from this level here to actually go to the upside. Okay, so if we come back to this level and it actually closes below this daily, that is very significant for what the weekly and the monthly are going to be looking at doing. Okay, so January has been bad for indices. Okay, everything has been on a downpour, and we, you know, it only makes sense for it to do that because we are at all-time highs. Excuse me. So with it doing that on the daily time frame, we're at that 88.6% level. If we do not get, you know, some type of accumulation at this level and it keeps continuing lower, we have this key level here where we kind of bounced off of on the weekly. But if we get a close below on the daily for the weekly, in my opinion, we could basically be seeing something formulate like this, okay, to actually then potentially go lower, okay. That is what I believe will happen if the daily structure breaks. So what we can kind of see, like I said, going into as the market opens on Monday, if this area does not hold up, it is spelling more bearish movement for the indices, okay. Don't want to say all indices, but definitely for US 30. This is going to continue to downpour if we close above this level, okay. So definitely going to be eyes on with this throughout the week. Potentially when the market's open, you can see the alerts I've got set, because you know we're at a critical level. If we don't see something substantial in terms of some bullish momentum, we could be in for a big correction on this pair, okay. Because if you look at the monthly and even the 3-monthly, quarterly, you know, where we've kind of had the last swing leg here, we were all bullish leading up to you know, throughout 2021. We were always heading higher. So if you think about it, it would not be a bad thing if we do get that massive correction, okay. A lot of people will say it's a crash, and you know, you potentially couldn't call it that, but when you technically look at the chart, it's just doing a massive retracement, which hasn't really happened with the indices, okay. It's been very inflated for a very long time, and in doing so, you know, people in terms of investors, they're probably looking at the market with a bit more caution and understanding that, you know, now is probably a good time to take some profit off of the table, okay. A lot of companies are doing the same. We've seen Jeff Bezos do it, we've seen Elon Musk do it. These guys have been cashing out billions recently, okay. So that is probably having an effect on the market as well. So just from a technical perspective and kind of piecing it together with what we've been seeing in the news and seeing these wealthy figures do, that is probably why we're seeing a downpour to start the year, okay. But just because it's starting the year like this doesn't mean the whole year will be bearish, okay. So let's see what unfolds with this. Like I said, we're at a crucial level on the daily time frame, okay. So definitely going to be watching this. So those are the 3 pairs that I'm actually going to deliver on this outlook, okay. I do have a few more to go through, but I'm actually going to be putting it into the Discord channel. If you are not in the Discord channel and you'd like access, okay, it is a £25 subscription fee per month, okay. You get access to all of our charts, you get access to our live streams from Tuesday to Friday, which is we stream the London session as well as the New York session, okay. So if you're interested in any of that, please get in touch and inquire with us so you can get access to our Discord, okay. Again, if you've liked the content of this video, we appreciate that. Please like and subscribe if you have. Comment as well if you have any questions about anything that I've discussed in the section. We'll sure to get back to you as soon as we can, okay. And remember, guys, as well, the giveaway, it is live, okay. We're going to be doing it. The winner will be announced on the 31st of January. Free PS5 giveaway, okay. So if you want to be interested and entered into that, okay, now is the time to really get over to our Instagram page so you can follow the instructions that you need to do to be in with a chance of winning that, okay. Excited to announce that, and again, it's just a token of our appreciation for all the new subscribers that helped us get to 1,000. We're just over 1,000 now. I have to check it again, but yeah, it's a milestone for us, so we truly appreciate everyone that is rocking with us and subscribing to our channel, okay, guys. So yeah, gonna leave it there. Excited for the week ahead. You know the vibes. It's lit side, and remember, every day is money day. Peace.